They mention Canada,
Yeah.
but then their examples are Toronto.
That's right.
Yeah.
Yeah.
That's because Global News thinks that they still think Toronto's the center of the universe, like many other people, right?
Yeah. So,
Yeah, there's a Global News article here that says, wave of mortgage renewals drive owners to list homes, analysts say. Okay, so to be very clear about this, right? The Toronto housing market, the single-family detached homes, semi-detached homes, and townhouses
Yeah.
are selling like just steady. The prices are basically flat.
yeah.
Or slightly better, like
Yeah.
1% over or 1% down. You know, I'm just going to call that flat, not much of a change.
Yeah.
But you know, if you look in the weeks past, condos, new construction condos are flooding the market. Those are coming to completions.
Sure.
And the investors that bought them are putting them on the market.
Yeah.
So they go on to say the wave of mortgage renewals are mostly Toronto condos. But like
So investors. But here it's like, wait a minute, if you're on a renewal, you're either on a 1, 2, 3, 4, 5 or Yeah.
10-year renewal.
Yeah.
That doesn't mean a new construction condo. It seems a little ducky.
Interesting. Unless the condo was 5 years ago.
Well, then it's not a new construction
But like, no,
anymore.
let's say it took 5 years to build or 3 years to build. I don't know. I don't know what's
But
going on.
you don't
in
get a
Toronto.
mortgage on it 5 years ago,
That's true.
right?
Yeah, you're
you
right.
get it
Yeah.
on completion.
Yeah, for sure. Yeah,
Even
I
with
got
the,
it.
even with the build time,
Yeah,
right?
yeah.
So that clarifies that idea. So it's like they're conflating two different things at the same time. Like,
Right.
is it pre-construction condos that have completed now
Right,
that
right.
are flooding the market? And I think that's the most common information I'm being told.
Right.
But sorry, I'm just particular. Like, why is it so behind us? And this is my fault. But on the other hand, the Financial Post.
Okay. Here we go.
So Global News says the mortgage renewal is causing homeowners to list their houses
In Canada,
which
is Toronto in their minds.
right, which that's the data they show.
Okay.
But Financial Post their report is many Canadian homeowners are delaying moving due to high cost of living, survey says,
But they're already homeowners.
and they're not listed because they're delaying moving.
Okay, but okay, so you're saying that these. So let me just understand this. Are we saying then that these people that own their own homes, have for some period of time, 5, 10 years, whatever, are now looking to upgrade or move into a different neighborhood or something along those lines?
The survey is saying that most of the people are deciding to stay put because of the high cost of living, which I think, like, if you've been in a house for 10 years, you are better off protecting yourself in a home against inflation.
Right.
Yeah, there's property taxes are going to go up. Insurance is one of those other things that go up.
Right.
Right. But your mortgage payments might be fixed still at this point.
So what they're saying is you might have been considering upgrading to a nicer home, nicer neighborhood, bigger house, whatever.
Yeah.
And you've said at this point, I'm going to stay in my current home because the cost of living doesn't equate to me being comfortable in and selling my house and moving to another
Let's say possibly upgrading the house.
Right.
Right. If they're talking about cost, I'm thinking about like they're more conservative before moving up in cost. Like if it's a bigger house or nicer area, something like that.
Yeah, yeah.
So I think in the survey it said 21% of those people are deciding on renovating their home that they have.
Okay.
So again, that's an older home. It's
Sure.
dated. Maybe it needs a repair, and you call it renovation, but you're getting a roof at the same time.
Sure.
Right. So, but there's like this sort of contradictory statements being made in the market, like the Toronto new construction condo market is not all of Canada.
Right.
You know, we're probably going to be following some of these headlines until we get bored of it, or to either debunk it or say, hey, look, this is actually affecting the market. But I just think one aspect of the market doesn't affect the whole market.
Sure.
Right.
I
You might have some negative sentiment about new construction condos.
Right.
But the single family detached homes in Toronto seem to be doing just fine. And I'm talking about the median home. I'm not talking about luxury homes
Right.
that you can cherry pick and show like, oh, look, they bought it 2 years ago and now it sold for $500,000 less. I'm sure you can find examples of that in like many markets.
Right.
But that does not reflect the market on a whole and on average.
Yeah. And I think the other thing is that's a pretty sensationalized headline, the Financial Post one, that it makes it sound like there's all these people that they're stuck and they're waiting to get out. They can't get out kind of
Of
thing.
their house.
Yeah.
Right, but it's contrary to the like mortgage cliff renewal idea at the same time, right?
Yeah, and I think the other thing is they've just said, we would like to upgrade. We hear this from clients, whether the market is good or bad, where they've said, we like to upgrade, but the numbers don't make sense for us.
Yeah, definitely.
Right? So I think that's really what that's saying, is they would like to upgrade, but the numbers don't make sense for them.
That's a good way to put it. I'll use myself as an example. I bought in 2007. My mortgage rate is still lower than today's rate, but if I renewed today,
Yeah.
my original mortgage rate was still higher. So it's not like I wouldn't be able to handle the payments, but like I'm so far along in my mortgage
Right.
that I'm paying like, if this sounds confusing, just hear me out for a second. I'm paying less than 50% of my mortgage now, or 50% interest is what I'm trying to say.
Yeah, okay.
Right? So at the beginning of your mortgage, you have a 25-year amortization. It could be 30, could be something else, but let's go along with 25. At the beginning of your mortgage payments, 90% of your payment goes towards Interest, perfect.
Yeah.
So, and as time goes by, it should be at the halfway point between let's say 25 years amortization. You should be paying about 50-50. 50% of your principal, 50% of your interest. So this is what I have a problem with refinancing a home. I get it. If you have to fix a problem, you have to pay some debts off, but to not just refinance your house to get a lower interest rate, because it's not the interest rate that really matters, I think. That's my crazy opinion.
Sure.
It's where you are in the life of the mortgage. So I don't think about like, oh, I'm paying 3.5% interest. I'm paying 5.5% interest. 90% of my payments is interest. It doesn't matter what the rate is. It's almost all interest.
Yeah, and that's where...
So I'm not motivated, if I've been in my house for very long,
Yeah.
I'm more motivated to buy another house without selling this one or refinancing this one, because I'm so far down the line. I don't want to start the race, the marathon over again at the beginning.
Yeah. And,
so,
I was going to say that's where I remember when I first heard about this, that the value of making an extra payment on your mortgage, however many times a year they allow you to do it, that you can do, because that extra payment is applied directly to the principal.
Oh yeah, I'm with a good mortgage, whatever provider, and it gives me so many options. So I went from like you could make monthly payments, to bi-monthly payments, and I pay every week.
Okay.
And I can pay a double up payment. I can pay a certain percentage of my mortgage, and I can pay one extra payment.
Right.
They gave me so many options.
Yeah.
But I'm also sitting on a 40-year amortization. So I have like really low payments in that. So that's a whole other conversation about like
that's
mortgage.
Let's bring in the mortgage broker conversation, whether it's Dave or whoever we have in for that.
Yeah, but I think it's not only the interest rates. I think will keep people in their houses. People who have been in longer than 10 years.
Yeah.
I think unless they built up a lot of equity, they've gotten, maybe a windfall of money, maybe a promotion, their salary is bigger, and now they're going to use their equity and they can move up and they pay the difference between what they used to owe and what their new salary can bring now. And sometimes you can bring in that old lower interest payment with you. So you have I think it's called a blend and extend. So you have your old mortgage, you carry it with you, and then you take the higher interest rate mortgage, the difference only. So you have only a small portion there.
Right.
So,
Okay, well, we're going to get off in a completely different tangent if we keep going down that route. However, I think what we can take out of all of that is what we've said from the start is it's not just what the headlines say when you get into it and look at it. So,
absolutely. You know, you got to look at your own personal situation. Don't worry about where the market is. You know, when I first bought my condo, I don't even remember the interest rate. It was just like, this is what we could afford.
Yeah.
Let's get into the market. We think it's a smart idea.
Yeah.
We grew up, and this might be a mentality thing. Both sets of parents owned. So we just thought, like, how long are we going to be renting for?
right.
We should buy something.
Right.
Get in the market, get on the property ladder.
Yeah.
And I'm so happy looking back on it. It's not quite 20 years. No, it is 20 years now that I've been an owner. I'm so happy I was able to do that. And I just helped first-time home buyers buy a place. And you know, it doesn't matter what the interest rate is, the price, as long as they can make the payments and they're not stretched and they can afford it, they're going to be so grateful looking back in the next 10 years,
Sure.
15 years, 20 years,
Yeah.
looking at rental prices behind them, interest rates, it won't matter to them at you know, in the future.
Sure.
As long as they can get past this initial start, or yes, it's a bit of a stretch to buy a house. You know, yes, you're going to have to be thinking about whether we replaced the hot water heater. We got a brand new roof when we first moved in, so that's a long time ago. We renovated the kitchen. We replaced appliances. Yes, those were all additional costs that we had to worry about.
Right.
But it makes almost no difference because our mortgage rate is our mortgage payments are so low.
Right.
So, you know, and I look back at it now it's 20 years. Like, it's a drop in the bucket. Like, this is how, like, we can afford to live in an more expensive place like Victoria because we've already bought assets that protected us against inflation.
Hey, thanks for joining us today. Hope you got some good information out of that. Please take a minute and like and subscribe. It helps us out with getting the word out there. If you know anybody who you think needs to see what we're talking about, please let them know about it.
And of course, if you're thinking of buying or selling real estate in the Greater Victoria area or anywhere on Southern Vancouver Island, you can get a hold of us. Our information is in the description below, and we'd be happy to help you. Thank you so much for watching, and we'll catch you in the next video.
See ya.